Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Nio Inc. Annual Report. Nio Inc. offers a wide range of businesses and services related to smart electric vehicles. The company's primary products include 5- and 6-seater electric SUVs, as well as smart electric sedans. In addition to its vehicle sales, Nio provides various power solutions such as Power Home, Power Swap, Power Charger, Destination Charger, Power Mobile, and Power Map. The company also offers a range of services including repair, maintenance, and bodywork through its service centers and authorized third-party service centers. Furthermore, it provides insurance options such as statutory and third-party liability insurance, vehicle damage insurance, data packages, auto financing, and financial leasing services. Nio's energy and service packages cater to the needs of its users, providing them with a comprehensive solution for their electric vehicles. The company is also involved in design and technology development activities, manufacturing electric powertrains, battery packs, and components, as well as sales and after-sales management activities. Nio Inc. maintains a market capitalization of $123 billion, broadly in line with the industry peer group. Nio Inc. trades at a higher price-to-book ratio of 25.25 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 87% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for Nio Inc. are multifaceted and varied across different business segments. One key driver is the increase in vehicle sales, which has been a significant contributor to the company's revenue growth. Additionally, the rise in sales of parts, accessories, and after-sales vehicle services has also played a crucial role. The provision of power solutions and battery as a service, BaaS, have also contributed to Nio's revenue growth. The latter involves buyout transactions, extended warranty services, and services provided to the battery asset company. Furthermore, embedded products and services such as home chargers, vehicle connectivity services, and battery swapping services have generated significant revenue for the company. Government subsidies have also been a major contributor to Nio's revenue growth. Moreover, auto financing arrangements have provided a substantial source of income through interest income from auto financing programs and sales of home chargers and vehicle connectivity services recognized over time using a straight-line method. On the other hand, some factors have contributed to Nio's revenue decline. The manufacturing cooperation agreement with JAC has led to a decline in revenue from fees paid to JAC due to independent manufacturing by the group in phone plant and FTWO plant starting in early 2024. Additionally, an increase in raw materials inventory has also negatively impacted the company's revenue. Lastly, net operating loss carryforwards have increased, which can be used to offset future profits. However, this factor is more of a financial accounting adjustment rather than a direct driver of revenue growth or decline. The net income of a company underwent significant fluctuations between 2023 and 2025. Initially, it decreased from -$20.7 billion in 2023 to -$22.4 billion in 2024, indicating a worsening financial situation. However, the trend reversed in 2025, with an increase to -$14.9 billion. The profit margins of the company also experienced notable changes during this period. The gross profit margin saw a substantial improvement from 5.51% in 2023 to 9.87% in 2024, representing an increase of 84.6%. Although it continued to rise to 13.62% in 2025, the growth rate slowed down to 37.1%. The operating profit margin also showed significant improvements from -40.8% in 2023 to -33% in 2024, indicating a reduction of 19.2%. The trend continued with an improvement of 51% to reach -16.2% in 2025. These changes suggest that the company made efforts to improve its financial performance and reduce losses over time. The company's financial performance has shown a significant improvement in recent years, particularly in 2025. One key indicator of this success is the generation of positive operating cash flow. According to the financial statements, the company generated RMB 992.6 million, US $427.9 million from operating activities in 2025. This achievement is a testament to the company's ability to manage its operations efficiently and effectively. The positive operating cash flow indicates that the company has sufficient funds to cover its expenses, invest in growth initiatives, and return value to shareholders. Furthermore, this trend is consistent with the information provided on pages 325 and 406 of the financial report, which also confirm the generation of positive operating cash flow in 2025. The company's ability to generate positive operating cash flow is a crucial aspect of its financial health and sustainability. It allows the company to invest in new opportunities, pay off debts, and maintain a strong financial position. As such, this achievement is a significant milestone for the company and a testament to its financial resilience. Management is optimistic about Nio's outlook, citing a successful implementation of their business plan. They expect growth in revenue, optimization of operations, and sufficient funds to support continuous operations and meet payment obligations within the next 12 months. The company's available cash and cash equivalents are expected to be sufficient to support its operations for the next year. In terms of strategy, Nio plans to invest an additional RMB 20 billion in Nio China by December 31, 2025. This investment is part of a broader plan to expand the business and complete the listing application and issue the material assets restructuring plan related to the qualified initial public offering before December 31, 2027. Management acknowledges some risks, including exchange rate fluctuations and potential changes in tax obligations due to the EIT law. However, they are confident that their business plan will mitigate these adverse conditions and ensure the company's continued growth and success. The company has made significant moves in its business operations through acquisitions. In February 2024, a technology license agreement was signed with For7 Limited, marking one of the key acquisitions. This deal is further reinforced by deeds of novation and variation executed with For7 and McLaren Automotive in August 2025. These agreements demonstrate the company's strategic efforts to expand its capabilities and partnerships. Nio Inc. has demonstrated a commitment to returning value to its shareholders in two key ways. Firstly, the company has paid dividends to its ADS holders and shareholders, as stated on pages 117 and 255 of the extracted summaries. This indicates that Nio Inc. recognizes the importance of sharing its profits with its investors. In addition to paying dividends, Nio Inc. has also engaged in share buybacks through its 2026 share incentive plan, as mentioned on page 403. By repurchasing shares, the company is able to reduce the number of outstanding shares and potentially boost earnings per share for existing shareholders. This dual approach to returning value to shareholders highlights Nio Inc.'s focus on creating long-term value for its investors. That concludes the financial summary for Nio Inc. Feel free to comment below, and I will be happy to answer them when possible.